Relative valuation involves comparing the valuation of a company to its peers or industry standards to determine if it is overvalued or undervalued. Common metrics used in relative valuation include price to earnings, PE, price to book, PB, price to sales, PS, and enterprise value to EBITDA, EV/EBITDA. The price to earnings, or PE ratio, measures a company's current share price relative to its per-share earnings. This ratio is used to compare the company's valuation with the industry average or specific competitors to assess if it is overvalued or undervalued. Let's calculate the PE ratio for a company with a market price of $50 per share and earnings per share, or EPS, of $5. By applying the formula, we determine the PE ratio to be 10. The price to book, or PB ratio, compares a company's market value to its book value. This ratio helps assess whether a stock is undervalued or overvalued based on its assets. Let's calculate the PB ratio for a company with a market price of $50 per share and a book value per share of $40. By applying the formula, we determine the PB ratio to be 1.25. The price to sales, or PS ratio, measures a company's market value relative to its sales. This ratio helps evaluate the value investors place on each dollar of a company's sales. Let's calculate the PS ratio for a company with a market capitalization of $500 million and total sales of $200 million. By applying the formula, we determine the PS ratio to be 2.5. The enterprise value to EBITDA, or EV/EBITDA, ratio compares the value of a company, including debt, to its earnings before interest, taxes, depreciation, and amortization. This ratio helps assess the valuation of a company based on its operational performance. Let's calculate the EV/EBITDA ratio for a company with an enterprise value of $800 million and an EBITDA of $100 million. By applying the formula, we determine the EV/EBITDA ratio to be 8. Each relative valuation metric has its strengths. The PE ratio is useful for comparing profitability. The PB ratio is effective for asset-heavy industries. The PS ratio is good for evaluating companies with low or no earnings. The EV/EBITDA ratio provides a comprehensive measure that includes debt and operational performance, making it suitable for various industries. To perform a relative valuation analysis, we gather financial data for a set of companies and calculate their PE, PB, PS, and EV/EBITDA ratios. By comparing these ratios to industry averages or peers, we can assess whether the companies are overvalued or undervalued. This example demonstrates how to conduct a relative valuation analysis using Python. Relative valuation compares a company's valuation to its peers or industry standards using metrics such as PE, PB, PS, and EV/EBITDA ratios. This approach helps determine if a company is overvalued or undervalued. Integrating Python into the analysis enhances accuracy and efficiency, providing valuable insights for informed investment decisions.